guys, welcome to the Silver Report. We're here, it's Saturday, February 11th, 2017. Gold is currently trading at $1,233.90. Silver's at $18.03. And we have some breaking news coming up. Frontrunner, French presidential candidate Marine Le Pen says most holders of nations' debt don't care what currency they get repaid in. The investors themselves tend to disagree. If the redenomination of the debt became a real possibility, we would need to reassess our exposure to France, end quote, said Yannick Naud, head of fixed income at Banque Audi in Geneva. International emerging market investors expect much higher yield for debt in local currency than in hard currency in order to compensate for the current risk. I would expect the same for France in this scenario. Marine Le Pen, on February 9th, the National Front leader, is trying to convince French voters they can leave the European single currency without hurting their pocketbooks ahead of a presidential election in April. As part of her plan, she intends to take control of the Bank of France and print new francs to pay for welfare spending and to service the government's financial obligations. On Thursday, she was speaking in a 2-hour television interview. Le Pen defended the policy of redenomination, saying that it wouldn't matter for investors or the French people. Concerns that Le Pen will triumph in the elections have roiled markets this week, pushing the premium investors' demand to hold French bonds over similarly maturity German debt to the highest in more than 4 years. We don't care who owns France's debt. What matters is what type of contracts the debt is in, Le Pen said. Lenders won't be repaid in euros. The contracts are in French law. And according to the International Monetary Fund, 90% of the French debt is under French law. That means that only 10% would be at risk. It's the lex monetaire, she said, referring to the right of a sovereign state to choose which currency it will use. Now, the interesting thing about this, changing French debt into francs would constitute a default in the eyes of the major rating companies that we just brought up the corruption in the other day, according to Christian Lenk, the senior market strategist at DZ Bank AG in Frankfurt. Moody's Investor Services scheduled to release an update on France's AA rating on Friday. The yield difference between French and German 10-year bonds widened 2 basis points to 70 basis points on Friday. That's down from about 80 basis points on Tuesday, the highest since 2012. So this is a major issue. The major consideration for international investors is what the new French franc is worth relative to the old euro and relative to their own currency, said James Atney, a fixed income portfolio manager at Aberdeen Asset Management in London. French investors might not care as much, but investors who base currency in dollars or sterling would be very much care, as the base currency valuation of their holding could end up being significantly less. And what it means is it's pushed their bonds higher, their sovereign bonds higher. And this is what happens with third world nations. Like you have the South American nations or African nations that want to go and have debt. They need to use other people's currency because the risk that is involved in lending to such countries is too high. And so it would decrease their credit rating and thus, in essence, crashing their country, crashing the economy of France if they are determined to leave the single currency of the Eurozone. It says Le Pen will get a shock if she tries to pay French debt in francs. And so what we're seeing is exactly the issue that is happening all over the Eurozone, is that they are wanting to leave the euro. And it's a major issue. They do, and she's right. Sovereign countries have a right to choose which money, which currency they want to use. They have a right. But these central banks have power, and those that have lended to France during this this economic crisis that has wreaked havoc on all of Europe, not only on France, but Greece, Italy, and Spain. All of these countries have submitted to bailouts. They were in need of bailouts. Their economies were suffering to such a great extent that they required bailouts. And so now that it comes time to want to exit the euro, now that it comes time to reestablish France, because it's an impossibility to continue to pay these rates, they're talking about crashing France, about investors that are buying government bonds, fleeing from France and collapsing their economy. It's the same similar situation we see that's happening in the United States. We need more debt. We need to raise the debt ceiling, but we have China bleeding government bonds, Japan bleeding government bonds. We have the whole world departing from U.S. government bonds because they don't see a return coming out of these bonds. And if what they're saying is true on their propaganda streams or news streams, whatever you want to call it, if what they're saying is true, then why are other countries, lender countries, departing from the United States, departing from France? Anybody who wants to step aside and move out of their system. We saw that China, there was also a conflict that took place in the South China Sea. Just today, they said that it's the first time since Donald Trump took office that such a conflict took place. A U.S. Navy plane was flying over the South China Sea in international airspace, over international waters, and we saw that there was a intercept plane that was sent up by the Chinese military, the Chinese Air Force. They said that the risk of miscalculation was extremely high and extremely dangerous. And this is what we're talking about, is that a country that was one of the largest creditor nations that was buying U.S. government bonds, we're now having interaction with them. So the same thing that is going on in France, and this is going to affect the United States. This is going to affect the entire Eurozone. The Eurozone, and if you look at the NATO alliance, the European nations, along with the United States of America, Canada, Australia, this is one of the largest military blocks that has ever been created. A very successful grouping of nations that since World War II has ruled the world and really dictated to the world just exactly what other nations are going to do. And what we're seeing is that almost every one of the nations that is involved in this strategic military alliance is bankrupt, including the United States, including not just the states within the United States, but the federal government, which every month adds more deficit spending. So we see not only is our country broke and the independent citizens broke, but all of our allies that we have are broke and in debt. And the turmoil that will arise from the breakup of the European Union will change the shape of the world forever. And it is going to cause massive panics, and it will cause stock market crashes. We already see that the stock market is overvalued as it is. We already see that investors have enthusiasm put on by propaganda. We see that they can't raise interest rates. We see that we have some major issues facing the economy in the United States. And when the euro falls, not only is it going to cause immediate shock and massive loss of wealth within the stock market. But it's also going to reshape the world powers as we know it. The dollar is used as a world reserve currency, and all the other major nations, we see the BRICS nations forming together, which includes India and China, Russia. They have some of the most powerful economies in the world right now. China's growth is massive. We have India's growth is massive. In fact, China just had an expanding of exports into the United States that just raised 9% in this big rush, afraid of trade tariffs that are going to be taking place if Donald Trump gets in and renegotiates trade between China. So there is a massive rush to get more goods into the United States as fast as possible before that door is closed. And so we are looking at some major turbulence coming up. And when currencies begin to falter and fail, when countries no longer are willing to buy U.S. government bonds, what you have is a drop in a credit rating, which with our astronomical debt will cause massive economic crisis throughout the entire world. The best plan of action is to take steps now to prepare, to move your money out of the US dollar and move it into hard assets like silver or gold. To take some time and invest in food and water, storable, non-perishable food. In the event that supply trucks are no longer running as a result of mass panic and violence in the streets, these people are protesting over executive orders about immigration. These people are in the streets burning cars at the inauguration of a president that was elected overwhelmingly by the United States people. What do you think they're going to do? We have food stamp applications on the rise in the United States. What are you going to do when there's no more benefits going to these people? Who are they going to blame? There will be violence in the streets. Secure your home and your family's safety. I thank you guys so much for joining me here on the Silver Report. If you are new to the show, it's your first time listening, you might have noticed the comments in the comment box. It says Free Silver February. What we're doing here on the Silver Report for the month of February, expiring February 27th. If you are subscribed to the channel and every time you type in Free Silver February, every 3 videos on the Silver Report that you type it into, you're entered in for a chance to win. The prize is shown in the video. Look at it in the channel. It's called Free Silver February. It explains the whole thing. And I thank you guys all so much for joining me. And as always, stay safe. If you guys are new to the channel, you see all the comments, Free Silver February. Just want to let you know, check out the video, Free Silver February. For everyone who subscribed and comments in 3 different videos, Free Silver February, they're entered in for a chance to win the prize. It's explained in the video. Thank you guys so much.